So there was a lot of Bitcoin buying that strategy did in 2024. It also has bought a significant amount of Bitcoin in 2025, but it hasn't quite matched up in terms of BTC yield. And the euphoric mNAVs that we saw in 2024 are in a lot more reasonable range.
You're right, in November there was this kind of exuberance in the market and we had a smaller base, which meant like when we raised $20 billion in 2024, the BTC yield we got because of where the price was and because of the smaller base, we generated about a 75% BTC yield.
Across the whole year.
Across the whole year. This year we've again raised about $22 billion, but maybe at a lower premium and different kinds of instruments, we've generated about 25% BTC yield. If we raise another $20 billion next year at, let's say, similar premiums, then we'll generate maybe a smaller premium. So it's naturally, as a company becomes bigger, you need to raise more and more capital at elevated premiums to generate similar BTC yields. But the risk is also far lower than maybe the risk of a smaller Bitcoin Treasury company, which doesn't have the proven execution capability, doesn't have the same access to capital markets, doesn't have the same trust in the management team. So maybe the rapid pace of BTC yield might slow down, but that also means the risk actually is kind of reducing as the scale is becoming bigger. So there are a lot of more pure play Bitcoin Treasury companies, but yeah, they still have to prove themselves. They have to show that they have access to capital markets the same way we do. And hopefully with time, a lot of them will prove it. And it'll be a good thing for strategy.
Yeah, that's an interesting thing, because usually whenever a company operates in a particular industry or space, it doesn't like too much competition. But in the case of strategy, in some ways competition is not good because you're competing for still a definite pool of capital that can be raised. But in other ways it's really good because in the end they're buying Bitcoin with it. So in the end they're creating more demand for the underlying asset.
Exactly. And Bitcoin itself is just so tiny right now. It's $2 trillion. And then you look at within that Bitcoin Treasury companies, what is their total fixed income instruments, the market cap of all of them combined? For us, it's like 17, 18, $20 billion. And what's the total fixed income asset pool in the world? Like $300 trillion. That's the amount of credit that exists in the world. There's just so much potential market cap expansion for the whole space and then within that strategy. So it's really, yes, in some sense, we are competing with the same limited pool of capital, but it's not really a limited pool of capital. It's just like it's a knowledge thing. And as awareness grows for Bitcoin and Bitcoin backed credit, that potential market cap is just going to like expand so massively.